Hello, this is the Tradesight U.S. Stocks, Futures, and Forex Market Preview and International Economic Data Roadmap for the week beginning Sunday the 25th of July, ending Friday the 30th of July. Yes, that's right. That means July is over, which is kind of a blessing. July is usually not the best month of the year. Summer's, no matter when your summer starts, almost everybody's in summer during July, so that's why the volume's been drying up. So getting past July, even though a lot of people are still in summer during August, some people come out of it. I know here in Arizona, for example, our kids are already back to school, so people are home and back to work. So hopefully things, typically August is a better trading month. And then, of course, once we get past August, things pick up for legit after Labor Day in September, and then you go into the best 8 months of the year. So excited to get past it, but it's been painful. Here's a look at the dollar index daily chart. We'll start with Forex. As you can see, no net action for the week. We are half size right now because of the way the Forex market has died off for the summer. Here's the euro dollar, which is just the inverse of the dollar index. As usual, the pound dollar dipped and then came back this week. So a couple winners, a couple losers, not a lot of action overall. Aussie dollar ended where it started for the week. The euro yen, not much there either. Pound yen, not much there either. So there's really not much to say from the daily chart perspective. If we look at the intra-week action, 30-minute candles, high to low for the week. Look at this. This is the definition of your problem, right? The euro dollar traded 70 pips of range for the whole week. And by the way, if you take out those two 30-minute, let's call it 1 hour spikes, and just cap it off at 18.10, the euro was basically in a 50 pip range for the whole week. That is not tradable. Pound dollar, a little bit better at, let's call it, maybe 200 pips. And that's why we had all of our trades in the pound dollar, and again, a couple winners, a couple losers, doesn't add up to too much. So I don't want to spend a lot of time focused on Forex right now because it's just not that interesting. But here's a look at the ES front month futures contract. This is the daily chart of the broad market and futures forum. We did have a sell-off, but it was a gap down Monday. So what we were hoping for, and then instead turns into a gap down and held down, and looked like it could be the start of something interesting finally. And then Tuesday, nothing. Wednesday, a little bit of a rally. Thursday, basically dead. And then Friday, started out dead and pushed up a little bit on very light volume. We'll look at the volume numbers here momentarily. So it ended up being not even remotely the week we were hoping for. Crude oil up 27 cents to 72.17. Gold closes down $3.30 for Friday, 18.12.20 or so. S&P cash gains 44. New closing highs on the S&P 500. New closing highs on the Dow. NASDAQ 100 up 171.62. New closing highs on the NASDAQ. No shocker. SOX up 20.64. This one's been trapped under that 13 sell signal for a while. The biotech's up 40.96. This thing hasn't gotten near highs since back in February, basically. Russell 2000 up 10. Just drifting. This thing's been so flat basically all year. Really disappointing to see the small caps doing nothing. The trend closes... the VIX closes down 49 cents to 17.20. The trend closes at 1.96. That's a big reading on the trend. Takes the 10-day back up to 1.20. And if I count backwards, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Not really any super big numbers dropping off here for this week till Friday. So, I don't expect that 10-day to get down where we care about it. NASDAQ volume was under 4 billion shares on Friday. It was under 4 billion shares. Even worse on Thursday, which was the narrow day. Wednesday, barely above it. Monday and Tuesday, a little high. Remember, Monday was the down day. So when we go up, there's no volume. When we go down, there was volume. NASDAQ advanced decline ratio on Friday, negative 116. So more stocks were down than up, but just barely on the New York, plus 820, 814. 814, so positive there. 10-day moving average, though, is negative. Google up 91.87. New closing highs on Google finally broke that risk line. Note that you got the 13 sell signal. You touched the risk line. You came down. Now you hit the red static trend line. That's not the static trend line from the 13 sell signal, I should remind you, but you did hit a static trend line and bounce right off of it. Apple up $1.76, approaching new highs. Netflix up $3.64. Amazon up 18.61. Remember, it retested. Remember that 3,500 level? We talked about this last week. Retested perfectly the high from back in October that it finally broke out of. Perfect retested that. Tesla was down $5.88 on Friday. Not much there. The Facebook up 18.60. Wow. Unbelievable. Zoom down $2.16. Goldman Sachs up $1.34. And this hasn't gone anywhere for a while. Again, the gap down on Monday, really Goldman was gapping down. Looked like, if Goldman had broken under that low from June on Monday, we would have been off to the races to the downside. TLT, the 20-year bond ETF, down a point, but it's been up. Dow was up 238. Again, over 35,000 for the first time ever on the Dow. And now up about 9,000 points since, we'll call it 8,000, let's be fair, 8,000 points since election day last year. Bitcoin, 32,480, 13 buy signal. Look at that. We mentioned that last week. Bounced right off that risk line. Bitcoin doing, so Bitcoin just as technical as everything else in the markets, right? All right, let's go to the intra-week action, but let's switch it to 10-minute candles so we can see the whole week. And here you can see Monday, the big gap down, and then went lower and closed at the lows. So it wasn't the excitement you wanted because of the gap. The gap was bigger than most of the move. But it could have led to something. Instead, it doesn't. We gap up small and fill the gap on the first 5-minute candle on Tuesday, and then kept rallying, came back, filled the whole gap from Friday's close the prior week. Got a 13 sell signal on the 10-minute chart. We closed basically at that close on Tuesday. We had gone nowhere for the week at that point, so we erased the gap down. Wednesday, a small gap up and just so untradeably flat. Thursday, a flat opening and really untradeably flat. Look how, remember, these are 10-minute candles. Look at some of these candles on Thursday, like right after lunch, where that 1 through 9 startup phase is, or even on Wednesday. I mean, these are so tiny. There's just no action. And then Friday, the gap up, the first hour is dead. Nothing looks like it's going to happen. We did rally it heading into the lunch, and that was about it. The rest of the day is flat. So again, what starts out thinking, oh, we finally getting the action we should be getting here in the markets, and instead we get very little action, and it's all on the upside, which is unexciting right now. So is what it is. Let's take a look at the economic data coming out this week. So Sunday we got New Zealand's trade balance, Japan's flash manufacturing PMI, Monday core CPI at 1 a.m. in the morning out of Japan. German IFO business climate, Belgium NBB business climate, the new home sales here in the U.S. at 10 a.m. Eastern time. Japan Monday night, the SPPI. Tuesday, M3 money supply out of Europe, private loans, UK's CBI realized sales, and then here in the U.S. durable goods at 8:30, housing price index at 9, consumer confidence and Richmond manufacturing at 10. Jump to nighttime, you got the UK shop price index. Bank of Japan summary of opinions, CPI out of Australia at 9:30 p.m. Eastern time on Tuesday. Wednesday, German import prices and consumer climate, nation housing price index out of the UK, Credit Suisse economic expectations, Canada's CPI, we got goods trade balance out of the US, preliminary wholesale inventories out of the US, crude oil inventories here in the US. They got a Fed announcement. Okay, so we got a 2-day Fed meeting here. That's going to slow things down Tuesday and Wednesday, obviously, with the Fed announcement at 2 and the press conference at 2:30. Not that I would expect them to do anything. Nobody does, but it's always about the language going forward. New Zealand's business confidence, import prices out of Australia. We're all the way to Thursday already. German preliminary CPI, Spanish flash CPI, Spanish unemployment rate, German unemployment change, UK's money supply and mortgage approvals, Italian 10-year bond auction. We got the first look. This will be a big one. This is the first look at the gross domestic product for the second quarter. So we'll see what we get there. Remember, that's the big one. We'll get the revised numbers a month later and another revised number a month later. But this is the one that everybody wants to see. Weekly, initial, and continuing jobs claims numbers. That's all at 8:30 a.m. So we'll be half size on Forex ahead of that. And on Tuesday night ahead of the Fed meeting. Well, and that's half of half because we're already half size because of the summer. Pending home sales at 10, natty gas at 10:30, building consents out of New Zealand that evening, Japan's unemployment rate and preliminary industrial production and retail sales. And then at 9:30 p.m. Thursday night, PPI out of Australia along with their private sector credit. Friday, housing starts out of Japan. French consumer spending and French flash GDP, French preliminary CPI. Spanish flash GDP, Italian monthly unemployment rate, German preliminary GDP, Italian preliminary GDP, CPI out of Europe, Italian preliminary CPI, flash GDP out of Europe, unemployment rate out of Europe. Canada's got their GDP on Friday. U.S. core PC price index, unemployment or the employment cost index, personal income and spending, and then we've got the Chicago PMI, Revised University of Michigan sentiment at 10 a.m. And then Japan's got their manufacturing PMI numbers. So, I mean, look, the Fed announcement's there. The first look at GDP is there. And this week we are entering, finally, had it wrong last week because it was a week later than it should have been, core earnings season. So we will be watching for earnings starting Tuesday. I got to tell you guys, with the Fed announcement, with the first look at GDP, that could cause some action, actually, with some of the earnings. But this is likely going to be, a lot of gappy nonsense and probably one of the choppier weeks or two during earnings season because it's so late in July in the summer. So I'd be really cautious trading this week and next week. Keep it consistent. Don't go crazy. Help is on the way as we get into August and certainly in September. But you don't want to make any mistakes during earnings season. That'll cost you dearly with everything that's going on. So we will call it as we see it and help you out. Charts as usual brought to you by eSignal. If you've not yet taken the trial of our services, feel free to do so. We will help you out for a couple weeks. Have a great trading week. And remember, this Friday is end of month statements printing in July.